A battery demo just sent a small cap stock soaring, but does that matter for the cars we'll buy? Let me break down what actually happened here. This small cap company demonstrated a new battery chemistry that supposedly charges 50% faster than current lithium-ion batteries. They showed a prototype cell going from 0 to 80% in just 12 minutes. Investors went wild. The stock jumped 300% in 2 days, adding over $2 billion in market cap. Financial media called it a breakthrough that could revolutionize electric vehicles. But here's where we need to pump the brakes. A demo is just one battery cell in perfect lab conditions. Pilot production means making hundreds or maybe thousands of units to test real-world performance. Mass manufacturing means producing millions of batteries per year at a cost consumers can actually afford. The gap between these stages can be 3 to 7 years, sometimes longer. And that's assuming everything goes perfectly, which it rarely does. Most battery breakthroughs announced in labs never make it to your driveway. Real batteries need to work in Minnesota winters and Arizona summers, survive crashes, and last 10 years. They need regulatory approval, safety certification, and insurance company sign-off. Most importantly, they need to be profitable at scale. Now let's talk about the supply chain reality that most investors completely ignore. Battery materials come from specific places around the world. 60% of the world's cobalt comes from the Democratic Republic of Congo. China controls 80% of lithium processing, even for materials mined elsewhere. These materials travel an average of 50,000 miles from mine to battery factory. Building a gigafactory takes 3 to 5 years and costs $5 to $10 billion. You need specialized equipment that only a few companies in the world can make. You need thousands of skilled workers who understand battery chemistry and manufacturing processes. Every single battery needs to meet automotive safety standards, which means extensive testing and quality control. And as we've learned recently, global supply chains can break down quickly. The economics only work at massive scale. Making a few thousand batteries costs maybe $500 per kilowatt hour. Making millions brings that down to $100 per kilowatt hour or less. That's the difference between electric cars that cost $60,000 and ones that cost $30,000. So what does this mean for you as a potential electric vehicle buyer? First, be skeptical of breakthrough claims. The battery industry has a long history of promising revolutionary advances that take much longer than expected. Today's electric vehicles already charge fast enough for most people's daily needs. If you can charge at home overnight, charging speed matters less than you might think. It's really only on long road trips where ultra-fast charging makes a big difference. Even if this battery technology is real, you won't see it in dealerships for at least 3 years. Car companies need 2 to 3 years just to integrate new battery technology into existing vehicle platforms. Then another year or 2 for safety testing and regulatory approval. And if you're buying the first generation of any new battery technology, expect some growing pains. First-generation products are rarely as good as the third or fourth-generation versions. Here's what really matters for this technology to reach consumers. Partnerships with major automakers. Tesla, General Motors, Ford, and Volkswagen don't just buy batteries from anyone. They have rigorous supplier qualification processes that can take 2 to 3 years. They already have relationships with proven battery suppliers who deliver millions of cells per year. Switching suppliers means renegotiating billion-dollar contracts and retooling entire production lines. A small cap company needs to prove they can scale from thousands to millions of batteries without quality issues. They need massive financial backing to build the factories and supply chains that automakers require. And they're competing against companies that already have those relationships and manufacturing capabilities. Without a major OEM partnership, even the best battery technology stays in the lab. So what could this actually mean for electric vehicles in the next 3 to 7 years? If this technology works, we might see charging times drop from 30 minutes to 15 minutes for highway stops. Faster charging could mean smaller battery packs for the same practical range. Smaller batteries mean lower vehicle costs, potentially bringing electric cars down by $5,000 to $10,000, or automakers might keep the same battery size and give you 50% more range. But remember, most people buy cars based on price, reliability, and convenience, not cutting-edge technology. The biggest barriers to electric vehicle adoption aren't charging speed, they're purchase price and charging infrastructure. We need more charging stations everywhere, not just faster charging at existing locations. We need electric vehicles that cost the same as gas cars, with or without breakthrough battery technology. Even revolutionary battery improvements take 5 to 10 years to reach mainstream affordable vehicles, so expect gradual improvement, not sudden transformation. From an investment perspective, this stock surge is classic hype cycle behavior. We've seen this before with internet stocks in 2000, clean tech in 2008, and countless battery startups since then. A few companies will succeed and create enormous value, but most will fail or get acquired for much less than their peak valuations. The challenge is identifying which companies have real technology, manufacturing capability, and customer relationships. Look at their patent portfolio, manufacturing partnerships, and existing customer contracts. Check their cash burn rate and how long they can operate without additional funding. Most importantly, look at management team experience in scaling manufacturing businesses. Even the best battery technology companies face 3 to 5 year development timelines. That's a long time for things to go wrong in a volatile market. The bottom line is this: battery breakthroughs are exciting, but they're just the first step in a very long process. If you're shopping for an electric vehicle today, buy based on current technology and your actual needs. If you're investing in battery stocks, understand that commercialization timelines are measured in years, not months. Now I want to hear from you. Do you think this battery technology will actually reach consumer vehicles within 3 years? Let me know in the comments what you think about these commercialization timelines. And if you found this analysis helpful, subscribe for more realistic takes on technology and investment trends that actually affect your wallet.